Good morning, traders. Welcome to another edition of Technical Talk, and welcome to the first full week of February. My name's Aaron Hill, and time is now 8:30 a.m. GMT. Now, Friday was a bit of a shocker, of course. The US economy added 467,000 payrolls in January, defying a record surge in Omicron cases across the nation. The unexpectedly strong non-farm payrolls report topped economists' projections. I mean, Bloomberg's median estimate was 150,000 at the time. However, the forecast ranged between a 250,000 advance and a 400,000 decline, with an average of 89,000 new payrolls. December's reading was also upwardly revised from 199,000 to 510,000. This is a 311,000. This 311,000 revision represents the largest upward increase since, I believe it was 1981. US unemployment ticked higher to 4%, touch under December's 3.9% print. Interestingly, average hourly earnings on a month-on-month basis jumped to 0.7%. This follows December's downwardly revised 0.5% figure. Now, in terms of economic events through going into the week, Monday and Tuesday are pretty much quiet in terms of macroeconomic events. But it is worth noting we do have the ECB President Lagarde taking to the stage at 3:45 p.m. today. Other than this, though, we appear pretty smooth until I believe it's Wednesday. Just bear with me. Yeah, till Wednesday. So early session Wednesday, we do have the quarterly New Zealand inflation expectations, and this is something to be aware of. Subsequent hours on Wednesday, we have FOM speakers at 3:30 and 5 p.m. alongside the Bank of Canada Governor Macklem also taking to the stage at 5 p.m. This week is a big week for the US, with inflation out on Thursday and also consumer confidence figures out Friday. I cannot emphasize the importance of US inflation figures this week, which is highly likely to rattle the financial markets. The consensus for the CPI year-on-year figure is an eye-popping 7.3%. With the underlying figure, the core figure at the year-on-year core figure at 5.9%. Now, note the inflation reading is scheduled to come in at 1:30 p.m. GMT alongside the initial jobless claims. This is usually termed weekly unemployment claims on calendars such as the Forex Factory. So yes, and the initial jobless claims is essentially the number of people in the US filing for unemployment insurance over for the first time during the previous week. And finally, of course, we have the Michigan consumer sentiment due out at 3 p.m. on Friday. Now, expected is 67.5, and this follows the previous 67.2. Now, in terms of where we are in the markets this morning, so Asia equity indexes closed underwater across the board. Japan's Nikkei 225 down 0.7%, South Korea's Kospi down 0.2%, and Australia's ASX 200 dipped by 0.10%. So in Europe this morning, we are pretty much mixed at the moment. FTSE is unchanged out of London. Germany's DAX is up 0.1%. And France's CAC 40 is also up 0.1%. And the Euro Stoxx 50 is currently trading flat. Now, US equity index futures, on the other hand, are currently lower across the board. Dow Jones futures is down 0.4%. Again, for the S&P 500, 0.4% lower, as well as the NASDAQ 100 futures, also 0.3% now lower. Now, in terms of the crypto market, we are higher. Bitcoin is up at $42,623, currently up by 2.2%. Ethereum against the dollar up 1.9%, and Ripple up over 14% this morning. And that currently trades at 0.77086. Okay, finally on to the currency markets. Majors this morning, we're not really seeing much movement other than in the Aussie dollar, which is up by 0.3%. And the dollar CAD is down by 0.3%. So mainly the euro dollar, pound dollar, and dollar Swiss are largely trading unchanged right now. So moving over to the charts really quickly. So on to the euro dollar. Euro dollar, the main point I really want to highlight here is the weekly resistance, the underside of weekly resistance at 1473, coupled with the, I believe it's the 14th, let me just get this, the 14th of January peak at 1483. So 1473, 1483, alongside the 1475, 61.8% Fibonacci retracement, and this is on the H4 time frame here. So combined, the 1473, 1483, and 1475 form a tight area of resistance, which I did highlight in the weekly technical market briefing. That this could potentially trigger a bout of profit taking, which we can see is occurring at the moment. Whether this continues down to the H4 support area is difficult to judge at this point. The H4 support area is at 1386, 1355. Now, if we do get a break below the 114 handle on the H1 timeframe, do expect quasi-minor resistance turn support at 1365 to make an entrance on the H1. Okay, on to the Aussie US dollar. So the Aussie US dollar does reflect in my opinion, reflect a bearish position at the moment. 71.96, 71.51, the prime resistance on the daily time frame, offered a strong offer into the close on Friday. Largely bolstered on the surprise NFP, which obviously underpinned the dollar and weighed on the Australian dollar. Anyway, as you can see, we did have a bounce, a rejection from this zone, and this really puts the decision point at 69.64, 70.40 in an unfavorable light, because it just really hasn't been able to generate much buying interest at this point. On the daily time frame, this alongside the, let me just move this alongside the RSI also turning lower below the 50 midpoint, signals a potentially a really bearish market, in my opinion. This on top of the weekly prime support at 69, 68, 72, 42, failing to really do anything, failing to really generate much buying interest since late November of 2021. Now, with this being said, on the H1 time frame, the 71 figure really caught my eye. As you can see, the 71 figure is situated below a Quasimodo support turned resistance at 71.15. Now, I did highlight in the weekly technical briefing that that we could see a whipsaw above this round number into this Quasimodo support term resistance. If this does occur and we see a subsequent close below the round number, we can, given the higher time frame picture, expect some form of pullback, some form of downside move to emerge, potentially targeting the H1 support at 70.42. Okay, on to the dollar yen. Look, so this is an upside market, in my opinion. On the weekly time frame, we have been trending higher since the beginning of 2021, formed within this ascending channel. Now, we do have a headwind in terms of a resistance at one point in the form of a 1.272% Fibonacci projection at 116.09. So do be aware of this. although our bias is, my bias is to the upside. So do keep an eye on this channel support. We could see a dip back to this channel support where traders may look, where longer term or medium term traders may look to form a bullish position. Now, in line with the bullish position on the weekly time frame, on the daily time frame, we recently had a double bottom form around the 113.50-ish range, and the neckline was taken at 115.06. Now, with this being said, this should, technically speaking, drive the dollar yen up to at least daily Quasimodo resistance at 116.33. Now, do note this is just a touch above the weekly level. So between 116.33 and 116.09 is an area of resistance I do have my eye on. Now, supporting this bullish, shall we say, phase, we do have the RSI trading from a support zone of 40 to 50. Now, technicians who use the RSI will note that within uptrending markets, the RSI typically forms a temporary oversold region between the 40 and 50 region within uptrending markets. So, and this is what you've seen here since May of 2021. As you can see, price has bounced from this area on a number of occasions and recently did so at the end of January, and is doing so again at the beginning of February. Now, in line with this, with the bullish position on the bigger picture, we do have a potential AB equals CD formation towards on the H4 towards daily Quasimodo resistance again at 116.33. Now, what we can see here on the H1 is, again, I did highlight this in my technical briefing, the weekly technical briefing, is a potential dip buying scenario forming from here, forming from the 115 handle, the prime support at 114.90, 115.01, and also a local trend line support, which was taken from around the low of 114.14. As you can see, price is on the doorstep of this area now, so I do expect some form of bounce to emerge from here, given the bigger picture. So finally on to the crypto everyone's talking about, Bitcoin. So we've broken, this is the daily time frame, we've broken a trend line resistance turn support, and this was a trend line resistance drawn from the all-time high of I think it was 69,000. Yes, 69,000, and we've broken this. We recently broke this, and we also penetrated resistance at 39,720. This is now a support, and follow through buying on this on the daily time frame could lead to a test of a mild Fibonacci cluster made up of a 61.8% Fibonacci retracement and a 1.272% Fibonacci projection at 44,241. So do be aware of these areas. Should we see a pullback form prior to hitting these Fibonacci levels, we can expect some form of floor to develop from this area. Now onto the H1 time frame. These are prime resistances. This is a prime resistance. As you can see, price is reacting from this area as we speak. So I'm looking at prime resistance, the larger prime resistance comes in at 44,259, 42,463. So price could go anywhere within this area before we see a bearish rejection. Though for more of an aggressive approach, the 43,053, 42,053 prime resistance is something traders may want to take into account. As you can see, we did react from this already recently on Sunday. I actually marked this up on Saturday, so it's already reacted, but it's not reacted to the area that I believe it should potentially head for. So I'm looking at this support area of around the 4,100, the 41,000 area, excuse me, as a potential downside target. So with that in mind, that's it from me this excuse me, that's it from me this morning. As usual, as I say in every technical talk, any questions or comments, please feel free to email the research team at marketanalyst@fpmarkets.com, or alternatively, send a message to our friendly support team at support@fpmarkets.com. Thanks for joining. Have a fantastic week ahead, and I will be back with you bright and early again on Friday morning. Thank you so much.